During the month, the shilling opened the month of October at levels of around 38.30, 38.40. We saw the shilling mainly stable throughout the month, but slightly strengthening to trade at levels of 38.10, 38.20. Major factors that drove the shilling strength during the month, we continue to see inflows from NGOs, but also commodity exporters. For example, agricultural products like coffee, tea, cotton exporters. We saw those inflows coming through. We also saw some offshore remittance flows starting to trickle into the market that led to the shilling strength. On the demand side, we continue to see pockets of corporate demand from the usual sectors, that's energy, manufacturing, coming through the market. So more or less would say that the shilling was range bound throughout the month between levels of 3800 and 3850. The Monetary Policy Committee sat on the 6th of October and they raised the central bank rate by 1% from 9% to 10%. What this implies for the short-term money, interbank money markets, interest rates are definitely relatively higher. It means the cost of borrowing is also going to increase for those who are borrowing in terms of loans for clients. We've seen some banks increase their lending rates, prime lending rates at the moment. Also, we've seen the yields on government securities like the treasury bills continue to edge upward with the 1 year trading at around 15.50% as per the previous government treasury bill auction held. So cost of credit is definitely becoming a little more expensive. On the other hand, for savers who are looking to invest in instruments like government securities, they're definitely getting a better return in terms of yield at the moment. We still continue to see the impact of a strong dollar globally. So we still anticipate that the shilling will remain weak overall, likely to trade between levels of around 3750 and 3900 as we draw close to the end of the year. We're still likely to maintain that range unless we see healthy remittance flows coming through. Previously, in the previous years, we had offshores coming to invest in government securities that also helped with the dollar inflows. But at the moment, with increased inflation and the outlook in the global economy in terms of all the macroeconomics, offshore investors are instead exiting most of the emerging markets, including Uganda. So we're not seeing many of these dollar flows coming through. So overall, the unit is likely to remain weak as we draw close to the end of the year, at least weaker than where we opened. At the moment, Uganda is not an exception in the global markets. We're seeing all markets have been impacted by the Russia-Ukraine conflict that's still ongoing. Commodity prices are high, like crude oil prices, which are impacting our fuel prices. We've seen central banks across the globe increasing their interest rates, including the Federal Reserve, Bank of England, European Central Bank, and Bank of Uganda also has gone ahead to raise the CBR rate because of the rise in inflation. So as an economy, we're still being impacted by the Russia-Ukraine conflict, and we're still likely to see a volatile currency and a relatively high interest rate.